Today, we're diving into what has been one of the most brutal weeks for the crypto world in 2024. From Coinbase's sharp drop to Bitcoin miners collapsing, let's break down everything that happened, why it happened, and what could be next. So buckle up. It's a bumpy ride in crypto land. Coinbase's worst week of 2024. First up, let's talk about Coinbase. The popular cryptocurrency exchange just finished its worst week of the year. Its stock price plunged by a staggering 20%, marking its lowest level since February. This is partly because they're caught in a messy legal battle with the SEC, which claims Coinbase might be illegally selling securities. Not exactly the news investors want to hear. Bitcoin mining in trouble. It's not just Coinbase having a tough time. Marathon Digital, one of the largest Bitcoin miners, also dropped 20% in value. And they're not alone. The entire sector for crypto stocks is feeling the pain. Schwab's crypto-related stock index hit its lowest point since February as well. Wider crypto industry hit hard, but the trouble doesn't stop there. It's not just individual companies. There's been an industry-wide sell-off in the crypto space. So why is everything crashing? Well, there's a lot going on, both inside and outside the crypto world. One big reason is growing concern about the overall health of the US economy. On top of that, risky assets like crypto and tech stocks have taken a beating. The Nasdaq, the stock market index full of tech companies, dropped almost 6% last week, its worst performance since early 2022. When tech stocks fall, crypto often follows. September, a historically tough month for crypto. If you've been following the crypto market for a while, you might know that September is often a rough month. Historically, Bitcoin tends to lose about 4.8% during this month, according to CoinGlass. Right now, investor sentiment is at rock bottom, with the crypto fear and greed index sitting firmly in extreme fear territory. Bitcoin and altcoins in Freefall. Bitcoin itself has dropped to its lowest level since February, falling about 4% in just 24 hours to hover around $54,000. And it's not just Bitcoin. Other major cryptocurrencies, like Ether, also saw a huge drop. Ether tumbled 12%, now sitting at around $2,200. Popular altcoins like Solana, XRP, and Cardano all fell more than 8%. So what's triggering this crypto collapse? Let's break it down. Weak economic data spooks investors. One key factor is economic data that's making investors nervous. On Tuesday, weak U.S. manufacturing data sparked fears of an economic slowdown. This caused a major sell-off across both traditional and crypto markets. It was the worst day in over 4 months for U.S. Bitcoin exchange-traded funds, ETFs, with $287 million being pulled out. Things didn't get any better as the week went on. The U.S. jobs report on Friday showed that August payrolls came in lower than expected. A weaker labor market usually means bad news for risky assets like crypto. Analysts say the labor market is a key indicator for the Federal Reserve's decisions on interest rates. Crypto market cap tanks. The overall crypto market took a huge hit as well. The total market cap has dropped nearly 30% from its 2024 high of $2.67 trillion. It now stands at about $1.9 trillion. And it wasn't just the big names like Bitcoin and Ether that suffered. Crypto mining companies and equities took a pounding. For instance, CleanSpark, another Bitcoin mining company, saw its stock nosedive 24%, and Riot Platforms wasn't far behind with a 17% drop. A glimmer of hope. Increased trading, however. Not all the news is bad. According to analysts at JP Morgan, despite falling prices, trading volumes actually went up in August by about 8% compared to the previous month. So, there's still interest and activity in the market. It's just that the prices aren't reflecting that right now. What's next? All eyes on the Fed looking forward. the big question on everyone's mind is, what will the Federal Reserve do next? On September 17th to 18th, the Fed is meeting, and they might decide to cut interest rates for the first time in 4 years. Some experts are predicting a reduction of 0.25% to 0.5%. Why does this matter? Well, lower interest rates are generally a good thing for risky assets like crypto because it makes borrowing cheaper, which can encourage more people to invest in things like Bitcoin and Ether. Inflation data coming soon, but before the Fed makes its decision, there's one more big piece of data to watch out for: the inflation report for August, which comes out this Wednesday. If inflation is lower than expected, it could be a signal for the Fed to cut rates, which might give crypto prices a boost. The Trump factor. One final factor that could shake up the crypto market is politics. On Tuesday, there's a U.S. presidential debate, and crypto could be a hot topic. Donald Trump, the Republican candidate, has positioned himself as pro-crypto. He even headlined the biggest Bitcoin event of the year in Nashville. Many in the industry see a second Trump presidency as a potential game-changer for crypto, especially since he's vowed to remove SEC Chair Gary Gensler, who's not exactly a fan of digital assets. Conclusion. So, to recap, it's been a brutal week for crypto. Coinbase and Bitcoin miners have taken major hits, and the market is down nearly 30% from its peak. Economic concerns and weak data have spooked investors, while September is historically a tough month for crypto. But there are a few glimmers of hope. Trading volumes are up, and the Federal Reserve's upcoming decision on interest rates could be a turning point. As always, we'll keep you updated with the latest news and trends in the world of crypto. If you found this breakdown helpful, make sure to like the video, subscribe, and hit the bell so you don't miss any future updates. Let us know in the comments what you think will happen next in the crypto market. Will the Fed's decision turn things around, or is the worst yet to come? Thanks for watching, and see you in the next video.